Welcome to the Female VC Lab podcast. I have Kim Flynn here. Kim, in one line, give me your name, your title, and the name of your firm.
Kimberly Flynn, co-founder and president of XA Investments. And we're a Chicago-based asset manager and consultant, and we help other firms enter the private wealth space.
Wonderful. What inspired you to become a venture capitalist and or investor?
I've always been interested in finance. I studied it in college, but started out as an investment banker, and that wasn't very appealing. And I wanted to get more involved with helping individual investors. So I've spent the last 25 years of my career focused on building high performing products for the individual investor. We all are going to retire at some point, and frankly, Americans lack a lot of investment options. We focus on opening up access to private market strategies because not everybody can buy private equity or venture capital. And so
Right.
that's our mission, and our focus is opening up access. And I would say I've spent much of my career focused on solving problems and creating new funds. And it's you get to stay on top of where money is moving and where the trends are. And that's a lot of fun because investments markets are cyclical
Yes.
and things are in and out of favor, and you're not going to launch a product at the wrong moment, hopefully. And so we advise firms on how to do that.
Mm-hmm.
And that's always excited me because I get to work across every asset class, every part of the market, public and private.
Wow.
And as a student of the markets, that's what's always been interesting. And I never really wanted to focus, let's say, just on healthcare or energy investing. I get to dabble a little bit across everything. And that's been a lot of fun.
That's awesome. Tell me a little about your thesis and what the motivation was behind that for your firm.
Sure. If you think about the way endowments or pension funds, large institutional investors deploy capital, they are going heavy into real estate, private equity. These are fairly illiquid type investments, long duration. If you commit to an infrastructure investment, let's say in a toll road or an airport, that
Mm-hmm.
capital needs to go to work for 15 plus years. And endowments and pensions typically have long investment horizons, and they're able to invest in a way that adds quite a bit in terms of returns. Now, I think people have woken up to the reality that if you look at our public equity markets, with regulation and other factors driving companies to stay private longer, the private side of the equity market has grown, whereas the public equity markets have shrunk. So
Mm-hmm.
companies used to go public much sooner. We used to have a
Right.
thriving small cap equity part of the market, and that's really shrunk. And you read headlines about SpaceX and XAI and
Right.
Palantir. These are many of them are,
OpenAI,
yeah,
Anthropic.
OpenAI.
Yep.
But how do you get access? And you want to
Mm-hmm.
access when the company is younger, so the growth rate is higher, the return potential is higher. And so I
Right.
think that compels a lot of individual investors to say, hey, I want to invest, I want that opportunity. But historically, you would have needed to be an institution like an endowment or pension fund. And we're creating these types of products that make private market strategies accessible to individual investors. So you don't have to buy a private fund. A private fund, from a tax perspective and accounting perspective, is a problem for most people because you're not getting the type of tax form that's easy for you to process. You're going to get a K1 instead
Right.
of a 1099, and those always come late. So if you're preparing your taxes on a normal schedule, then that's going to be a deterrent for you. But a lot of wealthy people, the wealthiest Americans, billionaires, they too are largely investing in private markets through drawdown style private funds. And there's been a big shift now for a lot of the managers of those private funds, the GPs. They're creating what we call evergreen funds,
Yeah.
which recycle the capital and reinvest over time.
Yep.
And that allows the individual investor, the retail investor, to participate in a way that the drawdown style, where you raise capital and you deploy it for 10 years, or you deploy it and then you harvest over that period of 10 years, a lot of firms have shifted away from drawdown to more evergreen style. And
Mm.
that, I think, facilitates more opportunities in the market that I'm focused on, which is US private wealth.
Kim, what are you currently reading or learning or listening to these days?
I read just like everybody else. So we do business in London and I read the Financial Times. So the FT is a good global perspective, just as the Economist's core reading. I read a lot of industry publications in our space. In addition to Barron's, we're reading things like Fundfire or Ignites. These are communications for the asset management industry, and we, with our consulting practice, will sell our advice effectively to other firms. So I'd say our focus is largely on those asset managers and the financial advisors. It's really the private wealth managers that we're targeting with our communications when we do our marketing. So I like to stay
Mm-hmm.
current on, there's a few other publications that are focused specifically on the RIA market, which is the independent financial advisor market. So CityWire covers that really well. There's a publication called Wealth Management that also covers that space very well. And I'm an avid book reader too, but I think my husband only reads history books, and I'd say I read plenty of history books, but I like a good romance novel. I just finished The Tattooist of Auschwitz, which was a book that was written many years ago, but really interesting because I also just watched the movie about the Nuremberg trials, which was
I haven't
having,
watched that yet, but
it's great. It's really well done.
I will
And
watch
it's
that
not
one.
what you, yeah, and it's not slow. I was expecting it to be boring, but it was fantastic. Sometimes it's helpful to do combined readings when you're interested in a topic like that
Mm.
and revisit it. But everybody knows the story, but to read a book and then to see a movie that speaks to that, I think can magnify what you've learned. And so anyway, so I try to, I think it's good to mix in a self-help book or an industry book, but I tend to read two books at a time. So that way,
Yes,
if you put one down, you have another one to go to. So
that's
that
right.
helps. Yeah.
That does help. Multiple book reading. So, how do you see venture cap in two? This is the bonus question.
Sure.
In 2 years, how do you see venture capital or investing having changed or evolved?
So a lot of private equity funds that have been built, they actually have an allocation of the fund. It's not a majority of the investments. They will also allocate to venture. So
Mm-hmm.
one way to reduce the risk of, at least for private wealth investors, of allocating to the earlier stage venture capital is to mix it into
Mm.
a larger private equity portfolio. So I think there will be more access in the market that I focus on. It's called the interval fund market. We do have a couple, two or three dedicated venture focused funds. One is taking a quantitative, diversified, placing a lot of small bets, just given the inherent risk and the nature of venture capital, really interesting approach. But then there's other funds, like I said, that are just allocating, let's say, 25% of a larger private equity fund to give investors a taste of venture
Mm-hmm.
inside of a portfolio which may have later stage investments. So I think that venture is going to be increasingly accessible, but I think that for retail and for private wealth, allocating in a diversified way, either through many investments across a portfolio or having it be a piece of a larger private equity portfolio, it's a way to make venture capital approachable as opposed to putting, an investment into a single firm, right?
Mm-hmm.
In terms of a private company, maybe you are a fan of Anthropic, but a lot of firms are trying to offer, let's say, a 5 or 10% allocation to Anthropic
Right.
alongside other investments that are on the same theme. Maybe they're
Mm-hmm.
playing the AI theme. So I think that's what's probably going to be more for, at least there's still a lot of financial advisors and gatekeepers who determine which funds that they offer clients. And so I think some of these risk mitigating approaches is the way that we open up venture to a larger group of people. That doesn't mean that there's not a role for dedicated venture funds, but I think it has a role to play. And I think for investors who are wealthier, who have the risk appetite, they can make larger allocations to venture. And so it's just exciting that I think people will now, to the extent that you have the desire and the appetite, there's more things that just are even hitting the news today that open this up a bit. I don't know that you would call it true venture, but some of these private companies are being packaged. Robinhood
Yes.
just did a listing. Fundrise is going to offer something similar. There's a few copycat funds coming, and those are listed closed end funds, an area that is near and dear to my heart because I've built many of those. But a lot of investors aren't really knowledgeable or comfortable with listed closed end funds. The dominant type of listed closed end fund is a municipal bond fund. So it's funny that package, that wrapper is now being repurposed or used for a different investment. And it makes sense for private equity or venture capital because the portfolio is closed. So you're
Right.
not going to have in and out in the portfolio. The fund may trade at a premium, it may trade at a discount, just depending on what the demand for that product is on the secondary market exchange. But once again, it's an access point, which I think is
Hmm.
for people who want access, it's something to think about.
Yeah, that's wow. That's good. That's a good thought. So, how do people contact you?
You can find me on LinkedIn. We post a lot of education information on private markets and on interval funds. You can also go to our website, xainvestments.com. We do a free monthly market update where you can track trends in these types of products for private wealth. Would love to hear from everybody.
All right. Thank you so very much, Kim Flynn from X